Want my latest market insights? My latest report, Catching This Falling Knife of Metal Madness, is now available. Scan this QR code or click on the link in the description.
We've had examples in silver where this has happened before, very much 1973. And this was one of the things that I gave as an example. This silver mania, and by the way, we all look at the market and we have justification of why we like something, whether it's a stock or a sector, because the market doesn't like boring. It likes manias. We went from AI to the space theme to data centers and space theme to Bitcoin had its time of mania. Silver had its time of mania. But this is still investor psychology or behavior 101. Parabolas are trapped longs. And then they reset after investor confidence resets. And right now the market is just too shaky and unstable. There's no reason for shorter or intermediate buyers. They don't need to go in and chase this falling knife. So I personally am more of an active analyst, and I'm not just looking at many, many years in the future and putting blinders on to any volatility that occurs. I actually look at this silver mania and I wonder to myself, wait a minute, how low is this going to go? Because my price targets hit on the upside. They have pulled back, but have not pulled back to my targets on the downside. And then when I look at the supply deficit specifically that everyone's getting so excited about for silver, there's a story there. They're talking about how we need $135 an ounce for solar break even. Okay, that's not necessarily so true. And one of the examples that I gave is Longai, which is a major Chinese manufacturer. They actually have started to migrate away from silver to copper. Why? Because high price is the cure for high price. So now everyone's getting excited about copper. I've been very bullish on copper for a few years. We made it to a $6 a pound. I think that can double over time. So it all depends on timeframes. Everyone has their unique definition of timeframe. But I think that was one of the reasons why we were also going to come back down for silver was the arguments about data center build out. Some of it is demand BS. Also solar substitutes like copper. This whole nuclear renaissance and U.S. government as venture capitalists throwing tons of money and price floors at critical minerals. Well, we got to come down and meet that price floor, and then they might even lower it. So it's not something that can be sustainable when you have a ton of FOMO in a particular market. I don't care if it's equities and AI, or metals, or Bitcoin, or space, or data centers. It runs up, and then they actually get a case of vertigo, and they look down, and then we go down. Any narrative prick in that bubble absolutely creates the volatility, and the volatility does not stay isolated to that particular asset. It spreads, it bleeds. Software will bleed to hardware. Metal volatility bleeding to Bitcoin and crypto volatility or equity volatility. It's all related.